Autos are a depreciation trap because there are two overlapping ideas. One is the passenger auto luxury limits, which cap depreciation even if the car is 100% business. The other is listed property, which adds strict substantiation and can block Section 179 and bonus if business use isn't high enough. On the EA exam, they love questions that mix weight, vehicle type, and business use percentage. Start with weight and classification. A passenger automobile is generally a four-wheeled vehicle at 6,000 pounds or less of unloaded gross vehicle weight, unless it's a qualified non-personal use vehicle. Those passenger autos are subject to annual depreciation caps. For 2024, the first-year cap is $12,400, then $19,800, then $11,900, then $7,160 each year after. Memorize the concept. Caps apply even when business use is 100%. Now compare that to heavier vehicles. If the vehicle is between 6,001 and 14,000 pounds, you're usually out of the passenger auto luxury limits. But Section 179 has a special heavy SUV cap. For 2024, that Section 179 amount is limited to $30,500 for most heavy SUVs and similar vehicles, though bonus depreciation may still apply. If the vehicle is over 14,000 pounds, the normal auto limits don't apply at all. Here's the big escape hatch: qualified non-personal use vehicles. These are designed so personal use is basically impractical, so the IRS doesn't treat them like typical passenger autos. Think ambulances, hearses, taxis, clearly marked police or emergency vehicles, and many shuttle or transport vans. A cargo van with only front seats and permanent tool shelving can qualify too. Key exam takeaway: if it's qualified non-personal use, the passenger auto limits don't apply, regardless of weight. Listed property is the IRS's Show Me the Receipts category. It's business property that's commonly used personally, so Congress added tougher rules. The classic listed property items are passenger automobiles at 6,000 pounds or less, plus entertainment-type equipment like photographic and video recording equipment. When listed property is mixed use, you allocate deductions by business use percentage, and you need substantiation, mileage logs, dates, business purpose, because without records, the deduction can evaporate. The exam favorite is the more than 50% business use test. If listed property is used more than 50% for business, you can generally use Section 179 and bonus depreciation on the business portion. But if business use is 50% or less, Section 179 and bonus are disallowed, and you must depreciate using straight line on the business portion. That's a harsh cliff rule, so watch the wording. Not more than 50% means 50% fails. Harborview Realty Services made a $200,000 down payment on a commercial building and assumed the seller's mortgage of $120,000. They also paid $4,000 in attorney's fees for perfecting title and $20,000 for permanent improvements before placing it in service. The property tax bill values the land at $70,000. What is Harborview's basis for depreciation? The choices include $274,000, $250,000, $324,000, and $320,000. Think about it. The answer is $274,000. Start with total cost basis, the down payment plus assumed mortgage plus title legal fees plus improvements. That's $200,000 plus $120,000 plus $4,000 plus $20,000, or $344,000. Then subtract the land value, because land isn't depreciable. $344,000 minus $70,000 equals $274,000. A tempting wrong answer is $344,000 because people forget to remove land. Which of the following business assets would not be classified as listed property by the IRS? The options are photographic equipment, video recording equipment, farming equipment, and passenger automobiles rated at 6,000 pounds or less of unloaded gross vehicle weight. Think about what the IRS worries you'll use personally. The answer is farming equipment. The IRS targets assets that are easy to mix with personal use, like passenger cars, cameras, and video equipment, so those are listed property. Farming equipment generally isn't in that category, so it's not listed property. The tempting distractor is passenger autos under 6,000 pounds, but that's one of the core listed property items.